Welcome to the Markets Happy Hour podcast, a weekly markets update for investors the world over. Each week we discuss inflation, geopolitics, interest rates, equity markets, and other asset classes. To try to answer the question, what does this mean for my investment portfolio? Let's dive in.
When it comes to the Fed holding rates steady, that was the decision that we saw this month. But as I noted in the title here, 9-3, three officials voted for an increase. And this split in the Fed does show how much pressure is building to act primarily on inflation. I think the other point that's very notable from this latest Fed decision is just how much of a lead balloon the Kevin Warsh communication strategy is proving to be. What we can see is that the general press, as well as commentators, as well as the bond market, the vigilante bond market, we could say, has not appreciated its the lack of direction, the lack of clarity. They have reacted by selling off. And there is a sense that this lack of communication will really lead to a breakdown in the nexus between the Fed and the bond market. Its ability to influence policy may well go away if there is that breakdown in trust that the Fed is likely to properly telegraph its decisions. So what we've already seen is a big jump in terms of bond yields, a suggestion here that the bond yields had touched their highest level since 2007, a suggestion that this was them calling his bluff on the inflation fight. But this certainly what we can see is that the sell-off in bonds suggests that confidence is ebbing and that this initial communication strategy, at least, is not being well felt.